Those who won. And for those who didn't, like I said 2 weeks ago, just go ahead and do it again, try it again. So very good. Approval of the agenda.
Mr. Mayor, I move to approve the agenda as presented.
I'll second.
All right, President of the Council Coates has made a motion to approve the agenda as presented. Councilor Hanson has seconded that motion. All in favor, say aye.
Aye.
Opposed? All right, motion carries. Next item on the agenda is the consent agenda. We have the approval of minutes for the October 27th regular city council meeting, surplus items for possible sale, claim ordinance A01-1025.
On the second item, surplus items, we have some things to get rid of. And my argument always is they need to be listed as surplus by the council. And then by appropriate or whatever, get rid of them. But that way we're not selling stuff just because we are, that way it's all to go process, so. That ain't been new here, so. It's just some old cars and stuff, there's nothing of any value, we don't try to put it out different.
Do we need to make more than one motion?
You know. Consent agenda gets them all, you know. Well, unless you want to pull something off, of course.
Sure.
You're buzzing. You are.
Hot.
Sit back a little more.
Well, Mr. Mayor, I move that the above mentioned items be deemed surplus and released for sale by the city clerk's office.
We can just make one motion to do the consent agenda if you want to. By making a motion to approve the consent agenda, we take care of this and
Okay.
once we do motion. That's why we have consent agendas, because a lot of these items are. I mean, there's nothing dying. If you had a $50,000 item for surplus, and then I probably wouldn't have put it there.
Okay. So I move
To approve the consent agenda.
to approve the consent agenda.
I'll second. All right, Councilor Moon has made a motion to approve the consent agenda. Councilor Allen has seconded that motion. Any debate, any concerns with that? All right, hearing none, all those in favor say aye. All opposed? All right, motion carries. Do we have anybody today for public comment?
Yes, sir.
All right. Moving right along, no unfinished business, on to new business. We have to set a date and time for a special city council meeting for the Kansas Open Meetings Act training.
Mayor and Councilman, this was talked about in the past, to do a training next Tuesday at 5:15. Then when Patrick gets done recording, he'll be here, so I'm guessing it'll take about an hour. But since it's gonna be a special meeting, we have to call a special meeting, so we need a motion to establish that date.
Mr. Mayor, I move to hold a special city council meeting for 5:15 PM on Tuesday, November 18th, 2025. For training on the Kansas Open Meetings Act.
Well, second. All right, Councilor Hanson has made a motion to establish November 18th, 5/15/2025 for the COMA training. Council Allen has seconded that motion. Any concerns? All right, hearing none, all those in favor say aye.
Aye.
Opposed? All right, motion carries. Next item is the discussion of city employee health insurance benefit package.
Mayor, council members, this is one of those items you hate to talk about, but it is a major cost to the city, so it becomes important. This year, as proposed right now, our health insurance rates are going up 10%. To the city itself, what the city pays, that'll mean an additional expense of about $3,000 a month or $36,000 a year. So you're getting to the point, how can you afford it? I did go ahead, if you notice in my agenda packet, what health insurance is costing the city right now, like a family employee, for example. And the city pays 80% of any policy, 86%, 14% paid by the employees. Other agencies, organizations pay maybe 100% for a single and less for a family. And it's all over the board. It's whatever's been done here, but this is probably past history. There's probably still a city or two in the state of Kansas that still pays 100% of any policy. But you also gotta realize, I always comment that 36 years ago when I started, I could buy a single policy for 100 and a family policy for 210. And those days have changed, of course. So it gets to the point, so if it keeps going up, what does that mean to salaries? And next year, we have no idea what's gonna happen next year because of use and everything else, but, the plan we're under with K-Myth, with Blue Cross does have a maximum in there that it cannot exceed more than 20%. Well, if it goes up 15%, that's another $4,000 a month hit to the city, and how do you continue forward? So what do you look for options? I think a couple options you can do is, one, you could change the percentages, and that's tough for the employee, because if you go on from, well, we're gonna change from a paying for 80% to 76%. What's that gonna do to your employees? They're taking away. It's gonna make a difference. I'm not sure if you wanna do that. The other option is a couple of things that I'm going to talk about is, one, is change our deductible. Our deductible is still $500 times 2 for family. Probably unrealistic in the world today. I think we need to move to 1,000, 2,000. Probably we should probably move it to more than that, but I don't think you should jump that fast here. I mean, I think we gotta do things with steps. So, I mean, where I came from, before I got here, we had a $2,500 deductible. You could buy, the employees could buy down to 1,000, some did, but it was $2,500 deductible. And everybody gets hung up with deductibles all the time, but you gotta realize deductibles, we don't know when we're gonna be deductible. I mean, most employees never meet deductible. That's what's concerned. You're paying for a plan that it gives everybody the coverage, but you're not getting full utilization, so it really costs a lot. Right now, for the past, I don't know how many years it's been now, the city gets their health insurance, a Blue Cross plan, but you're grouped together through a group to the Kansas Municipal Insurance Trust called the Association Health Plan, KHAP, and basically we love to get about 28 cities. So instead of having 23 or 24, 25 bodies here and families and plans that we're insuring, we now are in a group of 500 people. As I've commented before, this year, the rates are going up because there's a couple of really big claims in the group. Of course, when you're on the side, didn't have the big claims, you're going like, how running those. But I've also been told a couple of years ago, we had a claim here that was big. And I mean, and you never want to put a blame on anybody because, things are going to happen. I mean, there's going to be a preemie baby somewhere. There's going to be cancer. There's going to be, I had a plan with them. We had to buy a heart for a heart transplant, and then all associated drugs after that. So I think having the big group is good. So no means we want to get out of the K-Bid group, because in cities that we were one of the initial cities that got in here in Ellsworth a few years ago. They won't, a lot of cities that want to get in now, they can't get in. They're being picky. So it is what it is, and from that standpoint. So I came with another option that I have used in 2 other cities I've worked with, and other cities around here like Lindsborg and Abilene, I think Stockton and Mountain Ridge, other cities as well, maybe Russell also, have a plan where instead of buying, still keep the employees deductible at 1,000, move it to 1,000, keep it at 1,000. But the city, but buy the employees an HSA qualified plan, health insurance, HSA, health insurance plan. That means the deductible there is $6,350. But on a true HSA plan, which there you go HSAs, HSAs are tough on people because, one, it's a $6,350 deductible. 2, there is no office copays. There's no prescription cards. So if you're one of those people that had a $300 prescription at your house, that's $300 a month. And that's not a good option either. I mean, it's costly. If I was a single, I'm sure there's many farms in this county, single farmers that don't have health insurance through a spouse that probably have HSA type plans because it's a lower premium and you're taking some risk, But for an employee that's making, $17, $18, $19, $20 an hour, it's not a good risk. I mean, I feel bad about that one there. But keep everybody. So one proposal we have that I put out here is use a third-party administrator for everybody's management in Great Bend, who I've dealt with before in 3 other cities actually, is to go to page number 118 in your packet. You can look at that there. You there? It looks like this.
Yes.
Okay, you're all, okay, okay. First column, of course, is the type, but the second column is the plan we have now. Max out of pocket, all that good stuff right there. And then the next column is renewable, it's only 9.34%. I said that, but that was the average in the group, okay? So the next option is to go to a blue edge plan, which will only be a 3% increase. As you notice, the change right there, because the maximum out of pocket goes way up. So that's one. For the copay, yeah, the maximum out of pockets go up quite a bit. So that's a concern of employees, of course. The third option is to go with a, the last column, what we call the blue edge, but the H, it's through the 105 thing, the federal government. Where we would, employees would have a 63, would have a HSA, but they would have still deductibles yet, because it would be covered. So in essence, the city is going to insure from $1,000 deductible, self-insure, to the 6,350 mark. The city self-insures. So every month, it says we have a savings of 18% down there. What we would do with that difference is every month we would put it into a city savings account. So we buy the HSA plan, and then we would, but the amount we were budgeted, we were going to do this year on the renewal of the current plan, we put that aside. So if an employee goes in and has a $200 prescription, and in the copay, it's just for, it's different, but it's $50. So the employee pays 50, the city will pay the 150. Okay, until you get that 6,350 total, and then it goes self-insured. I'm told the county has a plan like this. I don't know how it's worked down here, how bad their plan is. I don't know how it does. And of course, when I always hear employees saying plans are bad, and I've heard this all my career, it's because, I mean, if we change the deductible from 500 to 1,000, does that make it a bad plan? Well, still a good plan. That's how things get covered. And I heard one plan that somebody said David didn't cover, the annual wellness exams. Well, that's covered by the ACA. I gotta have a plan that, every plan has to offer me, and that'd be the Blue Cross plan. The Blue Cross plan would actually pay, that's part of the Blue Cross plan, because the Affordable Care Act says I get my annual. Everybody gets the annual, so we do get those things. So when somebody says they didn't get the annual exam, I don't understand why, because the plans have to cover it in the blue, and we still have a blue plan there. The downside of all the difference in employees have to get used to, again, I've been through this before, is the employees would carry 2 cards. They give the doctor 2 cards, and then the doctor, and then you get billed to both. And anything under 6,350, the Freedom Plans would pay, the city would pay with the third-party administrator. And then they would go ahead and then the rest, of course, would be paid by Blue. And be taken care of that way. It's all taken care of. Right now, we do have an an HRA, health reimbursement account on the side. In essence, you would still have that, but you wouldn't have to submit those, all submittals for your claim stuff. So basically, and the other thing that would come out that we talked about, because we have to self-fund, I'll go to the next page here in a second, at the self-fund, is right now we have $1,000 accident, up to $1,000 accident plan. So the kid gets hurt, the first parent gets hurt, first $1,000 is paid for, and then it goes to co. If we're going to self-insure that piece, is my recommendation and everybody else's recommendation to get rid of that $1,000 and just go to your major med. Because if somebody gets hurt 5 times in a year, that's $5,000, and it didn't do anything to the deductible. And you gotta realize deductible was only 1,000, then there's some co-insurance in there, so it doesn't cost much to have, but when you finance, like I'll explain the next page, it gets expensive to finance, so you gotta be careful about that. So if you go to the next page, then page 119, you see what you'd have here. You'd have the blue plan. And then in tier two, you have the blue plan in tier two. And then the city would cover, you have $1,000 deductible and the city covers in between. This was a 500,000, but I was just going 1,000, 2,000. Bottom line is this plan, we put that money to the side. If we have enough funding in there that if 20 employees would hit the full HSA amount, that's all, it funds that much, and I would suggest we have to fund that much. More than likely, you'll have 5 employees, 6 employees. But you always want to, when the health insurance, anytime you do anything self-insured, that first couple of years, you want to insure the max. Because max expense was, I don't know what's gonna happen, and as I always told employees over the years, if you tell me what's gonna be wrong with you next year, I can design you a good health plan. Well, nobody knows, of course, and of course, in any health plan of a group, I got 24-year-old employees, how many times we all heard people get up and 50 and above going like, why the hell does my health insurance cover babies? I don't have a baby no more. But somebody in your group might, if I was a single male, he would still cover babies for me, and biology ain't there. So, it's health insurance. We have a group, everybody's together, and that's fine. What I'm really scared about is to go to the next page, then page 120, then, and you see a little bit of the umbrella coverage there, the Blue Cross. So we would send $31,000 to Blue Cross every month if we had this number of boys. And then the other $10,000 we would keep, well, we have TPA funds. But then we would keep some here and keep them going down there. And then we can build it up. Some cities have built up, I know two I've worked with, and I know other cities around that are in this kind of plan. They put that money aside for employee benefits. Maybe down the road, you can add a dental benefit if you have enough money, if there is savings. And there may be, again, it's number of employees that get sick. If you had 20 get sick next year, or 20 that hit the max, you ain't gonna have many left over. But again, what's the odds of 20 getting? It's never happened yet, probably. With any health plan, the K-Mid group of 500 people, probably only has 30 people get over $25,000. Or even deductibles, because you just don't. But again, you also want to cover when you have that big one, you have that $600,000 claim or $1 million claim or $2 million claim. And plans nowadays have no max. I was talking the other day, 36 years ago, roughly the same age, but we had $1,000 max on health insurance policies. And the joke is you won't live that long. Now we're talking about plan. It don't take long to do $1 million anymore. 11 years ago, my nephew got in a car accident and Greg's dad. And I don't know what the total was, but I know the first night they got well over $250,000. We start getting, flights and surgeons and everything else. And so, it's, and those things can't happen. And you always want to be prepared for it. You want to have a plan that covers it. So basically what I'm proposing is this plan here, we go to the 2,500, the HSA type plan, and then use the third party and self-insure ourselves, and to see if make that money. If nothing would change, it'd still be a Blue Cross plan. I was concerned about that, it'd be a Blue Cross plan. The only difference would be is for providers, they would have 2 cards. But I've reached J's now. I carry 3 cards actually nowadays. And you deal with all people with Medicare. We carry 3 cards. I got a Farm D card, I got a A, and I got a B, and all my good stuff, and and the clinical world has no real issues with it. I've never seen any issues with having the extra cards there. It's covered and paid for and stuff like that.
So, okay, because we've used I bill for the county, like on the Avalanche sound, so like the county on their freedom, their freedom claims doesn't pay until they meet their deductible. Like I submit it,
Oh,
but they have, like they each have, I don't know if it has the same deductible as our Blue Cross, but so even though I submit it, I get it from Blue Cross back, I can't submit it till I
okay.
get it back from Blue Cross. So they have to see what Blue Cross
Then you
did.
submit it for freedom.
Then I submit it for freedom, but unless they've met a deductible, their freedom claims doesn't cover anything. And I don't know that the county, I don't know
Okay.
this, just you.
We would have-
to say, you have to say, yeah,
Yeah, we would have to office co-pays.
that you would reimburse the people for.
Yeah, office co-pays. Now, the question is chiropractor, I'd have to check on that.
Blue Cross is chiropractors covered by Blue Cross, yeah.
Okay, so they're not they have a plan that's not doing that. I'm suggesting we have a plan that covers,
But that's what I'm asking, so
Yes.
is the city gonna reimburse everybody up to their deductible? That's what I'm asking.
yeah, you pay a $20 copay or 25 for an office visit. You know, yeah, I wouldn't want anything different. I mean, we can't. We can't, I mean, we gotta make changes, but you gotta do it with reason too.
No, I understand, I'm just trying to understand, like, so are you saying like, cause you're talking about going what tier? Tier 1
Where,
on that with the
what page?
payment at 120 maybe, 119? Or
Go
the,
to the far column. Give you the 188. The blue edge. And then we'll put an underlying in there. So we'd still do the $15 deductibles, for 15, 50, 75 for, drugs. Where's my office curve is at?
but like 25 specialists, is that what you're saying?
Yeah,
Other services, urgent, 25. But what I'm asking is, so the employee goes and do they pay this or do they, and then the city reimburses them?
no.
That's what I'm asking.
No, the city, okay, so they go to, like, you know, let's say it's $100 visit, just for argument's sake here. The $25 copay is paid to the provider. The $75 is then submitted, and until you start moving towards, your deductible, that's paid for out of that funds that we keep yours.
That's what I meant, like,
Yes.
so the employee essentially, if they pay their 25 or whatever, the city's gonna pick
Yeah,
up the
I
rest.
would not propose to change the benefits at all, other than how we handle the money here locally. Yeah, I don't wanna do that, and I've never had to in the past, you know. And again, I'm assuming city Russell's plan is similar to this. I know Lindsborg, Mount Ridge and Abilene are, you know.
So have you gotten feedback from staff on what they think of this plan?
Well, I think everybody would like to keep what we have, because $500 deductible is cozy, it's cool, it's safe, everyone likes.
Yeah,
I think the biggest concern I got is we hear from the county benefits aren't as good. And again, I haven't found out why, but I haven't seen their cards. I mean, I have to look at what their health cards and tell. But they may not be covering office co-pays. Where I was suggesting we have office co-pays because, you know, I'm just trying to find a way to long-term you can stabilize costs because you can't afford to do this. The next option is to go, okay, employees, we don't do 86% anymore, we do 60% or 100% of the 6%. And that would devastate your employees. I mean, it'd be, for the family employees, it's tough. I mean, you know, I came from a plan, we paid 100% of a single and not much, and nothing for a family. And that was horrible. And by our savings, this kind of plan, we were able to pay quite a bit more of the family. Which helps long term. It takes time. I mean, it's not gonna happen first year. You build your account up over a few year period, and against how healthy you are. Anytime you know, with health insurance, what happens now is basically you're buying the higher deductible plan, 60/50. Instead of a $500 or $1,000, and you bank that money. Okay? Blue Cross banks it as well too. And if you don't use it all, Blue Cross keeps it. If we don't use it all, it stays in the city funds for down the road, you know, covering. And it may help. One city, and I know one city that I used is, we had a rate increase went to 50% one year. And we were able to just with our reserves, we were able to knock it down to about 8%. Now we're within reason for the employees and everything else. I think that's the things you have to watch these things. We just need to, you know, I mean, we just gotta get a grasp on it, because like I said, the costs are gonna eat us alive. Because when you sit here and you tell the public that their health insurance costs are going up, you know, $40,000 for the city employees this year. And if you try to give that kind of raise at all, I mean, and I know insurance is important and benefits are important. But health insurance does not buy groceries, it does not make house payments, doesn't make car payments. It just, I mean, how do you find that magic in between? And unfortunately, it is what it is. I mean, when you look at trending out there and everything else, of course, you know, if you look at using a health insurance plan, you know, the big kick right now is pharmacy. Pharmacy is, you know, you can trend health insurance fairly good, you know, on normal health insurance. 0.5% to 1%, you know, a month. But drugs, and there's some stuff out there right now, and, you know, one plan that I used to do, we got hammered on drugs one year, I mean, just hammered. You know, those me that need them, I want them, I mean, you know, that's just the point too, so. The real issues right now are the weight loss drugs and stuff like that, you have to worry about, and, you know. And, you know, how's that fall in there, you know? Are you overweight because you can't help it, or you can't help it, it'll know, and then when you have drugs to lose weight, now how that all functions in, it makes it tough, because, you know. But then if you don't take care of the weight, then you have health problems, so, you know, there's just plethora of things out there. So. And we have what, Steph, 21st till Cayman? What's our day we have to tell Cayman by?
21st.
21st. We can probably squeeze out to the 24th if we need to, so we're gonna, we have to pick our option out there. You know, like I said, I know this option works, I've used it, our cities have used it, and again, I don't know the county plan well enough to know. You know, I'd have to see what they're, you know.
Yeah, and I don't know what if they
benefits.
reimburse, I don't know that, I just know that when it comes to like premium claims, typically unless the deductibles been met, then they don't pay anything.
Oh, they have it all, oh,
See, they have a Blue Cross and a Freedom claims,
yeah,
and so when you build,
and I didn't ask, but I'm not going to.
right,
Yeah, this one here, go to page, 119, over here in the right-hand corner. This would be our code base. In primary 25, yeah. Okay. Yeah, you missed that for. Emergency room 250. Yeah, most plans, when you emergency room, if you end up in the hospital, they don't have that in it, but you're gonna go over anyhow. But what that discourages is for me to run to the hospital all the time for, you know. That's scientific, but it does happen though. We just got, like I said, you know, we can keep the same this year, and actually, we're not gonna cut costs, we'd be moving to where part of that money now goes to the city funds. And we hope we can bank some of it, you know. That's different, the amount we're taking out per month is still gonna be the same. It's just that we're gonna make a decision now to put set up back for the city and try to extend long term. Where these plans come in place, right, you know, my experience, everybody else's experience is instead of health insurance going like this, we were able to do more like this, you know, you cut that curve down a lot, and it has worked, I mean, you know. But like I said, you get to the point, when you're, like I said, on a fun family, when you're paying $11 an hour for health insurance for an employee, you know, and only was it $3 an hour for a single. And I'm not gonna get into that, yeah. It's tough, I mean, there's no real answer, and I don't know what the answers are, other than that. My fiscal side is saying you can't afford a $36,000 increase every year. You know, that's my fiscal side. Now, I get it, like, you know, I've been playing it myself, and of course, yeah, I'm on your plan, and even if I was aged out, but I'm aged out on my other plans now, so.
So is there an option for the same plan, just with a higher deductible, like not that high deductible plan, but move from like 500 to 1,000 for an
Yeah, I
individual?
can probably find one of those.
Cause I feel like
I have, that'd be the
if
other
I
option
was an
too.
individual going from a $500 deductible to a $6,000
No,
deductible.
we only go to 1,000. Everything's still gonna be the same for the employee. It's just
Okay,
gonna be handled a little differently.
gotcha.
No,
So
I'm
is
not-
this quote then not entirely accurate?
Well, no, she did the 500. I said to her afterwards, can we go to 1,000? which would mean the city would have more in the bank to build that fund up a little bit. I do think we could do 1,000. I mean, I don't think anybody dreamed of a $500 deductible with a city employee, you know. I haven't had a $500 deductible for I don't know how many years, you know.
And I think if you can keep Blue Cross, I mean,
Oh, yeah,
you know,
keep Blue
because a lot
Cross.
of people, but a lot of people are not able to afford Blue Cross. I mean, mine just changed and my deductible 63.50. Period. Like,
You
yeah,
get to say, okay,
yeah, but it's not to do with Cross because their rates were getting so high.
Yeah.
So, yeah, I mean, so I think if you can keep Blue Cross, even if you have,
and I'm not saying Blue Cross is any better,
no,
we're just familiar with it.
right.
We are complex people with Blue Cross. And I've had years where I've been on self-insured plans where it was self-insured. And we saw like a $1,000-$1,500 deductible, but the city itself for our employee was like a $15,000-$20,000 deductible. And it's expected in the aggregate amount there, the city self-insured that. Which is okay until you have those nightmare claims. And if the city had a lot of reserve funds, I'm entertained looking at that. You don't have this. That's a no option. No. If we go from, the worst case scenario is go from $500 to $1,000 deductible. I would not propose to you to go to a higher deductible. Now, how we handle the claim back on this side, the city side, it did get a 6350 card, but the city itself will treat it as $1,000 deductible. That was not legal until about 2011 or 2012, when the 105 plans came out. So I've struggled with health issues. First year I was a city manager, Western Kansas, we had an 82% Blue Cross decrease. And we did a self-insured package that really worked back then. Back then, now it's a little time. Like I said, it's we had $1,000, $1 million lifetime deductible or use. And we all laughed at because nobody's gonna get there. Now we can do it in a couple days, so, you know, this is the way life is. So,
So would it be possible to present this to staff or at least department
Yeah.
heads to get some feedback? Because I'm not comfortable making a decision without
I'm fine.
kind of their input.
Okay.
Because this affects them more than, it affects us a great deal,
Right.
but I mean, it
Oh, I
affects
hear you.
their personal lives.
Don't, you know, I don't disagree. I mean, it affects a lot, you know. Yeah, I can get Blue Cross to push off the 24th, we can do that at the next meeting. Well, if the voice goes special meeting this week, I have to ready for that, reach out, we have to do that. Yeah, I get it. I mean, it's changed and every time you have changes and trust me, in my years, we've been going through change with health insurance and you know, but you always hear horror stories, but you always hear horror stories about their plans, but I don't always know what their plan looked like. Like the one told that news, it didn't cover well, annual wellness exam, was just, no, that's under ACA. I mean, I'm getting my wellness exam. I mean, and that won't even come out of the city's deductible. That's part of the HSA plan. I get a wellness, you know. Now, if I have a lot of difficulties with that, they may go towards my deductible, so like, get that, don't get me wrong, you know. I mean, if I go to a wellness exam, I don't know what they all cover. But there's a certain amount, but if I need extra tests, of course, it's me, that's on the plan, and then you have to be deductibles and everything else. I get that. I don't think anybody else does, so. I could do that and we'll reach out if we need to have some special, I'll let you know, but I want to get this ball started, because this is a tough subject to talk about. Well, one, it's confusing, and secondly, you're dealing with employees and salaries and everything else, but. You know, and you know, if you want to wait and just go with one now, that's fine with me. I just thought that as fiducial in my, as long as I'm here, you know, I'm gonna tell you what I think, you know. And it's that.
Yes, I think I thought that was excellent, because I was sitting here being overwhelmed, but if I'm overwhelmed, the employees may have some real concern, so I like the suggestion.
And if we do make a change, we would have, I mean, trust me, there'll be meetings and afterwards to employees how to handle everything, because the 2 cards, they'll go, oh, it's 2 cards. I want to get used to it, because you're gonna get 3 carts up there or more. And so that's not a big deal. It's just, and then providers, how they wanna handle them and, over all the years I've done these kind of plans, it's not been a problem. Perception was more than the actuality.
Any other questions about this? So maybe a special meeting, or we'll deal with it on the 24th.
I'll see what my deadlines are.
Okay, sounds good. Everybody's happy?
Yeah.
All right, moving on to next item on the agenda is ordinance number 3178, authorizing the execution of a loan agreement between the Kansas Department of Health and Environment, acting on behalf of the state of Kansas for the purpose of obtaining a loan from the state of Kansas Water Pollution Control Revolving Fund for the purpose of financing a wastewater treatment project known as a lot of letters, KWP CRF, project number C20.
Yeah. Okay.
Yep.
This was a late minute addition to agenda. In fact, I was ready to leave the office Friday afternoon, or about then, get my, had a lot of hours last week. And I got a packet from KDHE with the loan documents, but we've been talking about it, and had that discussion a couple weeks ago. This is all the loan documents here, and there's an ordinance that has to be passed. And if the ordinance gets passed, it goes ahead and the ordinance gives the mayor authority to sign everything, so we'll sign everything. The ordinance, of course, be published, we usually send this back until we go proof of publication, and there's some city attorney things that have to happen, and everything else, like on these kind of loans. The one thing that I had a question pop up, because I was always told at the get-go that this loan, $10 million, includes land acquisition. But when I went through the loan documents today, I'm saying that this is no land. Well, I've reached out to the engineer, Brian Foster, and also I reached out to Deb Oldie, because you guys hired North Central Regional Planning to do packages for the city. She's comfortable that the loan, that the purchase of the land for the lagoon is covered. The one that we still question a little bit, because some interpretation she's gonna try to get an answer on, is the additional land for irrigation. Now, her recommendation in mind is to go ahead and adopt this tonight, because it basically, if you look back at the amortization charge, it says $10 million, the $2 million loan forgiveness. If we only need to borrow, if they say, no, you can't pay for it, we have to look for other money to buy the irrigation land, you are gonna borrow $10 million. And the way these KHG loans work is you basically, so the motion tonight would be, so when this all gets documented in a month now, it gets all finalized, there's gonna be in essence, a $10 million line of credit here. Yeah. So the city then has to spend $500,000, $500,000. So we send it to KDHE, and so you start paying interest that $500,000. It's kind of like a loan when you build a house. When you need $500,000, you get the $500,000, and the interest starts on that. It doesn't start on the 9.5. Then 2 months later, you have a bill for $2 million over where it's gonna be. That starts the clock on the $2 million then. So it's per day. It's not, it's not you're paying interest on 10 million from, when I do some loan at the bank, if I don't have a loan, if I borrow $10,000, I pay interest in the day I get it to go my account. They're not putting it into my account. They're having it there for me to draw up to. And so when you get $500,000, that's when the interest starts on that. So in essence, you have a lot of loans aside, but it's all one big line of credit. So don't get confused that, we pass this tonight and the clock starts on $10 million for the interest. No, it doesn't. And most time payments, and this is something that you'll discuss down the road, is when they start making payments. Usually they wait until the year after the project is done, which will probably be into 2027 sometime, maybe 28. So you'll start, that's why we have to start building that cash flow now and get it going into it a little bit. Again, timing you have to do. But again, the only thing that maybe the question out there was, will this loan include the buying the ancillary ground for irrigation if we need to? And that's going to be something that we have to take a look at. So, but My recommendation is go ahead and pass the ordinance and get the process started, because we have to start moving. And of course, part of the ordinance says is that you realize that if you have to raise rates, you raise the rates, because part of the ordinances. As well too, and of course, we had that discussion, a month ago. I mean, it gotta be done. I mean, what we propose here in other cities in this area, I mean, I just talked to one before the meeting. About the city south of here that had to do, and their rates had to increase by about the same amount that we have to here. I mean, it is what it is. And is it too high? Yeah, it's too high, but you gotta do it. And, I think we're moving forward, but, you guys just keep moving on.
Any questions for Alan on this?
Yes, so I know this is being recorded and a lot of people watch it at home after the meeting, so could you explain maybe to the general public, what if we don't pass this tonight, what happens?
Where you gonna get the money? I mean, you got,
We have to do the project,
yeah.
right?
Well,
So-
ADG says you gotta do the project, because one, you have a lagoon that's 40-some years old. You got a lagoon that's no longer efficient. You have been penalized for, getting penalized, or you're gonna start getting penalized for releasing stuff into the river that is not what the level it should be. That's why you have to do this, okay? A mechanical plant would cost way too much money, because mechanical plant would probably cost you 20-25 million. And this is the option to stay with lagoons. Now, these will be non-discharging lagoons, so the water will stay there. But the last piece, of course, as designed, as you've been through the past, is you have that phase that water can be used for irrigation. We use irrigation water now to do the golf course, but there's no way you can use all the water, so there'll be an additional farmland that could be irrigated. And from what I've been told, that when they work with farmers, and we don't know if we're gonna have to buy that land yet from the farmers or do some lease arrangements or stuff like that. But it's quality, I mean, it works. The only thing on the golf course, it goes to the pond out there, and then we irrigate from it. There is value to that water, because there's fertilizer, I mean, there's nutrients in that water. And so we have good luck with it. If we don't do this, if we say no to the KHG loan, the KHG loan we have here has a $2 million loan forgiveness. If you tell them to go south and you don't do it, then they say, city, here's consent order, and we get some court stuff, and you better do it. And by the way, you don't get your $2 million anymore, and you get to pay this. And the KHG loan, the advanced KHG loan or conventional financing it's a 30-year loan. Now, I realize 30 years to spread your payments out a long time. But if we went to a 20-year loan, what would the payments do to your rates here in town? They go even higher. So, I mean, and this is all, I mean, when this,
We've been talking about it for
Yeah.
a while, but I think a refresher
Oh,
for just the general.
I don't
public
think
is-
we'll ever get enough professional. I agree with you.
Absolutely, especially if we're talking about raising rates, because everybody,
Okay.
probably us all included, think our rates are.
But I think that's too,
potentially.
everybody, like, our rates go up just like everybody else's.
Right.
We're not exempt, we're not,
Yeah.
so we're not just doing this for people that aren't on, I mean, our rates are going up just like everybody else's, so I think that's important.
Like it or not, I think in the very near future, the average rate for residential for water and sewer is gonna be close to $200 a month in most city places. It's just that cost.
Alan, the question I have is why the big push now? Like, why wasn't it 10 years ago? Like, why now? I guess that's the question. What
Has
is,
it been pushing for the last 4 or 5 years?
yeah, I don't know, but I mean, it seems like.
Yeah.
About all these cities throughout the state. What is driving this? Like, what, is it a,
I think one is it's like in our case, our lagoon ain't doing what it used to.
right?
And so we're not releasing quality water. Number two, environmental laws change. And we can, and you always could, blame political parties and like that.
Can Dave say something? It looks
But-
like he's-
You wanna get the water that comes out of the river and now comes to this community, you want that town there to clean it up as well.
Yeah.
Can I say something?
Yeah, come on up.
Okay, so we did look at this several years ago. Several years. But it kept on getting kicked off by the council. Okay, now we have a chance to actually do something And we need to get it done, because if not, we're gonna be way penalized, way more money than what we're doing, just what we're gonna do out here. It's just gonna, it's gonna cost us. And you're talking about the rates now. You don't even wanna know what the rates are gonna be if we don't do this.
And I think that's important for the public to know, so I hope people do watch this and understand that we are trying, and for the long term, we're trying to save a huge rate increase.
But you gotta realize what the city did 40 years ago. The residents have, used. What we're doing now is a plan that's gonna probably take care of the next 30 to 40 years. They're saying that that I retired from, they spent $110 million on wastewater upgrades. Now, granted, the population was 10 times more here. So when you do the math, not a whole lot different,
But I think we can all agree that we don't want clean water.
Mhm.
Like, I want clean drinking water,
Yeah.
clean water for.
well, and you don't wanna, trust me, you do not wanna get a consent order. I've been through that already, where now they said. No, and right now, KDG is working with the city, and like I said, the loan forgiveness is big. I mean, when you can knock away basically 25 or 20% of your payments. That's big. I mean, I'm not, I can argue that, that we can. So the past, administration, everybody else that did this work, was fine. Thank you, they did a good job again at this point. It's still a big ticket. I'm not gonna argue that.
And penalties if it's not done.
You wanna know, you'd see fines of thousands per day. Yeah, you'd be, no, you don't even wanna think about it. It's
Sure.
not a good thought. Yeah, not a good thought.
Those are regulations.
And there's a reason for it. We want clean stuff, on the other side, on the water side, the city that has to work with, lead and copper, we wanna get rid of that because we don't wanna be Flint, Michigan, so, there's, and I've had people tell me, I'll just tell the government to go away and, worry about it. Well, it ain't gonna happen. And don't blame political parties. It's like, these are not out of line things, I always get that, well, if they wouldn't have, these people would be in power now, I mean, it has changed. There used to be outhouses in this town. Not that many years ago.
I think there's still a lot, double.
In grade school, we had an outhouse. And Brad, I know a lot older.
Not most, maybe.
Oh, no, yeah.
The last thing I want to say is, I spent some time with Dave going through, water plant and going through the sewer. And it was like a light turned on. I think we just take it for granted, running faucets, taking a shower, take a bath, and using the toilet. Just going through the facility and seeing what needed to be done was an eye opener. And I would encourage, if you haven't done it, if something is an eye opener, see how the funds are going to be spent.
Anything else, anybody? All right, sounds like everybody's in favor of this, so,
Mr. Mayor,
A roll call.
okay.
Okay. I move to adopt ordinance number 3178, authorizing the execution of a loan agreement between the Kansas Department of Health and Environment, acting on behalf of the state of Kansas and the city of Ellsworth for the wastewater improvement project known as KWPCF, project number C20306601. Period.
Second. All right, Counselor Coates has made a motion. Counselor Allen has seconded that motion. We'll do a roll call vote. Darcy,
Aye.
Mr. Moon,
Aye.
Mr. Allen. Aye. Jessica.
Aye.
All right, 4-0. There we go. Okay, so that is the end of the new business. We're moving on to kind of a wrap-up stage here. We've got some. We don't have city inspector, don't have fire chief, golf superintendent, we don't have here tonight, police chief. Interim police chief Jeffrey Weigel would like to come up.
Nothing really new or exciting. We've got another employee hired that we're gonna get some for the academy before the end of the year, get started.
Fourth one then? Yeah,
And if everything goes well, yeah, we'll be up to 4 or 7.
good. Very good.
Go ahead, just read off.
He's not here.
No, she,
Gee,
I guess we make sure
Yeah, I've just been forgotten.
yeah.
but she just graduated, right?
Just graduated though.
Come on up. Yeah, come on up, Megan. Congratulations, yeah. We're happy to have you.
I know what would open up.
She has been introduced to council before. She's mostly done with KLATC. We just got a little bit left to go, and then she'll be hopefully done with FTO in a few months.
Very good.
Okay.
Thank you very much. Yeah, appreciate it. No rapid director, streets. David, did you have anything else?
No, I think I pretty much said what I needed to say.
Okay, all right. City attorney, Patrick, come on.
Not much, but I was listening, I listened to the car as I was being at a different fire, so I'll see you guys a week from Tuesday. We'll be here. We do city court at 5 o'clock. We'll be over this week. There's not too much on that docket. So 5:15, we'll do a training / discussion. It's a public meeting, so anyone can come and attend, but we're not gonna take any action on city business. We're just gonna do a kind of a coma core focus review with some other statutes that are.
You won't be able to be here.
I'm not gonna be able to be here, so I'll just connect with you and we can figure out what to do. Unless you're gonna record it, then I can watch a recording, sign and blood or something.
Wasn't planning on it. but we-
Okay,
I
then
don't
you and
mind
I
it,
can
it's-
disconnect and we can
Yeah.
educate you later.
As long as someone else knows how to do that, we could, so.
Okay.
And I was gonna say, just my 2 cents on the sewer thing, how I would describe it, as I was thinking, I was like, well, if somebody asked me, what are we doing, I'd say. We have the building code that we make people follow if they have a house in town. And the state has a code that they require us to follow, so if a house in town doesn't do what they're supposed to do, we fine them or tell them they can't use the services. State says if you guys don't do it, you'll get fined and you can't use the service. So it's just the same thing. And those fines would be retroactive back to the first time they identified a problem, so it would just be. And then it would nuke our bond rating and all sorts of terrible things, so it's, yeah, it would.
It'd be horrible.
It would be like, I think Alan, I appreciate Alan saying like, it's so bad, you can't think of it, but I know for lay people, it's like, it would be really bad, but I could name like 5 or 6 cities and sewer districts going through the whole thing. A lot of this infrastructure was built at the same time, and we've extended the useful life as much as we possibly could, and it's like, now it's just no longer doable, so unless, that's all I was gonna say, unless there's a question for me about something. Thank you.
Thanks, Patrick.
All right, thank you.
City clerk, Louise. No. City administrator, Alan.
Of course, the city office will be closed tomorrow on Veterans Day, and as the mayor said before, thank you to all the veterans. We are going to interview some candidates for police chief on Friday. We have 5 right now, still trying to candidate for that, which I haven't been able to do, whatever. And then, hopefully in a day or two, we'll hear something about the CBG for rehab housing. And, I think I have a meeting scheduled on Wednesday morning, so I can't say anything yet, but read between the lines, and that's a good thing, so that I can say. So that's all I have, thank you.
Very good. All right, city council, council president Coates, do you have anything?
Just thank you to everybody that came out and voted. There's a lot on the ballot, not just at the city level, school board, other things, so Midway District. So thank you to that, and I'll just echo thanks to everyone for their service.
All right, Council Allen, go ahead.
So the same, thanks for everyone who voted. I think we had a pretty good turnout, and happy Veterans Day to all the veterans in our community.
Very good. Counselor Moon.
Just like to say that in the newspaper, I saw pictures of, children, and I believe it said the class of 3038.
2038.
2038.
Yeah, 3038.
2038.
That's the way it's on, man. Yeah. Like, you'd be doomed or something, yeah.
But when I saw that, I was saying to myself, that's the water investment. It's a multi-generational investment. It's not just for the people here and now.
Yeah, it is, very good. Anything else?
No.
All right, Darcy, did you have anything?
Just happy Veterans Day to all the veterans.
Yeah, and I think for me, we'll go ahead and adjourn. Yeah, happy Veterans Day, and, you know, hopefully, we have just a great end of the year and a great, Thanksgiving and Christmas coming up. And we'll have a couple changes here on council, and we'll have a great year next year, so it'll be good. So without any further ado, let's go ahead and adjourn the meeting.
Mr. Mayor, I move to adjourn the meeting at 6:07.
I'll second.
All right, President Council Coates has made a motion to adjourn the meeting. Councilor Hanson has seconded that motion. No complaints about that. Hearing none, all in favor, say aye. Opposed, motion carried. We are adjourned.
Thanks, guys.
Thanks, Al.
Thanks, Al.
Drive safe.